Inflation is not coming down fast enough, and this is starting to worry the Federal Reserve Bank. Everybody said last month that inflation has peaked, so it's all blue skies ahead as the Federal Reserve Bank is winning their fight on inflation. Well, the most recent inflation report shows us that inflation hasn't really started cooling down, and in fact, month over month, core inflation is still increasing. The Federal Reserve Bank has two goals. Number one is to maintain price stability, aka manage inflation, and number two is to maximize employment, aka make sure people have jobs. Well, people have jobs right now because unemployment is low. However, inflation is still very high, meaning they're failing at this price stability, which means that now the Federal Reserve Bank has more ammunition to raise interest rates, which is why they just recently raised interest rates aggressively to fight inflation, because this is their way of trying to cool inflation and bring it back down to earth. Now, obviously, I've been keeping up with what the Federal Reserve Bank and Jerome Powell has been saying because my company Market Briefs covers what's happening in the financial markets, but Jerome Powell's tone on inflation and the fight on inflation has really been changing over the past few months. And if you listen to him most recently, you can start to hear that he's getting more worried and he's starting to get a little bit more desperate to bring inflation down because inflation is still extremely high and it doesn't look like it's starting to break yet. The Federal Reserve Bank has now done multiple large interest rate hikes, and while we've seen gas prices fall, we're still seeing rent prices and housing costs and food costs and grocery costs and medical care costs and new car prices grow at near record speeds. Now, typically, inflation is actually good news for assets like real estate and stocks and even cryptocurrency, because when you have more inflation, that means there's more dollars out there, causing the price of things to go up. But more recently, what's been happening is high inflation is bad news for assets, because high inflation means that the Federal Reserve Bank is going to be more aggressive to fight inflation. And if the Federal Reserve Bank is more aggressive to fight inflation, that means that the Federal Reserve Bank is going to be more aggressive in raising interest rates, which is bad for assets. Higher interest rates are bad for real estate, it's bad for stocks, and it's bad for cryptocurrency, because when you have higher interest rates, it makes it more expensive to borrow money. Like if interest rates are higher, that means your mortgage costs are higher, which means it's going to be more expensive for you to buy a home because now you have to borrow your dollars at a higher interest rate, so you have to pay more interest to borrow your money. So this is why higher interest rates hurts inflation, but it also hurts the economy. And right now we're in a tough situation where our economy is already hurting and inflation is still high, which means the Federal Reserve Bank is going to have to jack up interest rates even more to fight inflation, which hurts the economy even more. This is where it goes back to the same question that I've been asking for months now. What's going to break first? Is it going to be inflation, or is it going to be the economy? Is it going to be inflation, or is it going to be the housing market? Is it going to be inflation, or is it going to be the stock market? Or is it going to be inflation, or is it going to be the cryptocurrency market? The Federal Reserve Bank is playing this teeter-totter balancing act where they're working to raise interest rates. They've been hoping for a soft landing, meaning that they can bring inflation down without significantly hurting the stock market, the real estate market, the crypto market, and the economy. But now it looks like the Federal Reserve Bank is going to have to be even more aggressive for longer to fight inflation, which means expect more pain for all these assets here. Now, while this might sound like all bad news, it's actually good news for investors if you understand how to think a little bit different. Because anytime you see distressed assets, meaning crashes, recessions, all these things are almost like a Black Friday investing shopping event for investors, because now you can go out and buy investments at a discounted price. And right now we have this massive bubble in the real estate, stock market, crypto market, and pretty much every asset class that has been built up through all the cheap money, all the free money that was printed and given out over the last number of years. And now the Federal Reserve Bank is trying to prick the bubble, and that's going to cause these things, the economy and asset prices, to get hurt. But this can create a buying opportunity for you if you can find the good assets to buy. Now, the assets that will get hurt the most are the most speculative. These are like your tech companies, your cryptocurrencies. Now, what will also happen is some of these things will fail. Some cryptocurrencies will fail. Some tech companies will fail, just like other companies and other assets will fail. But the ones that are the most speculative obviously get hurt the most. But it can also present some of the most opportunity, because if you can find a good investment, buy it at a discount, you can see the most return if it recovers with a growing economy. Now, of course, high risk, high potential reward. So you got to manage your risk. And if you do decide to go out and invest in something like cryptocurrency, one, understand the risk. understand your investment portfolio, how crypto plays a part in your portfolio. And third, understand your exchange, because some exchanges may also go bankrupt. We've already seen exchanges like Celsius and Voyager declare bankruptcy and freeze people's funds. So look for a good exchange. And if you're looking for a good exchange, you can check out something like our sponsor, FTX US. I like FTX US because of 3 reasons. 1, they've been bailing out a lot of the struggling crypto exchanges out there. So they've been well capitalized to do that. Second, they have some of the lowest fees out there, so more of your money can go to actually buy you crypto instead of just making your brokerage richer. And third, it's super easy to dollar cost average buying things like cryptocurrency. Like I buy Bitcoin and Ethereum and a couple other coins every single day, and it's super simple. You just click a few buttons, enter in how much you want to buy, and then it's done. So now it's passive and automatic and consistent to help you dollar cost average your investments. That way now, no matter what's going on with the markets, whether it's up or down, you just keep buying more and accumulating more. So if you want to learn more about FTX US, I'll put the link to how you can do that down in the description below. And if you enter in the referral code MINORITY, you'll also get some free cryptocurrency after you trade $100 on their app. And the nice thing right now is that not only can you trade crypto and NFTs, but they now also will let you trade stocks right off the platform. So if you want to learn more, I got the link to how you can do that down in the description below. When you have inflation, you see the value of your currency drop. Now, while we've seen a lot of inflation here in the United States, we've also been very fortunate that the dollar, relative to other currencies around the world, has been very strong, which is why now the dollar can buy more things in other countries like Britain and other countries in Asia and other countries in Europe. And this provides a lot of value here, especially when you look at buying things like oil, which is a commodity. See, oil, a commodity, is a global commodity, meaning it trades for the same price everywhere in the world. And if you're in a country that has a weaker currency, well, now you're going to need more of your dollars to buy more of the same oil, versus if you have a strong currency, like now the United States does, well, now you can buy more of that oil with less of your dollar. Because while the United States dollar has always been the world's reserve currency, our strength around the world has really been growing relative to other countries because many other countries have been weakening faster than the dollar. This allows us now to buy more things like oil at a cheaper price, which has been very good for consumers, people here in the United States, because now you can buy gas at a cheaper price. One of the reasons why is because now companies can buy oil at a cheaper price. And if you can secure more of the raw product, oil at a cheaper price, it allows you to produce the product at a cheaper price. Now, why am I talking about oil all of a sudden when I'm talking about inflation and the Federal Reserve Bank? Well, one of the reasons why our inflation is as low as it is, and I know I'm saying as low as it is, even though our inflation numbers are still extremely high, is because energy costs and gas prices. Gas prices month over month fell by around 10%. That's one of the reasons why our inflation numbers were as low as they were today, because energy costs and gas costs have been falling. Why have they been falling for us here in the United States? Partially due to the fact that we have a stronger dollar relative to other currencies. So we've been able to use this dollar to buy more oil, which allows us now to have cheaper gas, which has been pushing down our CPI. Well, at the same time, our CPI is extremely high. So our CPI is lower than where it could be because we have a very strong dollar, which is also kind of concerning at the same time. Because now we have rent prices, grocery costs, food costs, medical costs, all these things still growing very quickly, but the CPI number that we see is lower than where it could be because gas prices have been falling very significantly. Now, this is where things get a little bit risky, because what happens now if something happens to the dollar or oil prices? Because if oil prices happen to shoot up again due to some sort of global uncertainty, due to some sort of global war, due to some sort of thing happening outside of the United States' interests, well, then that could significantly tip inflation back into a different direction. And if that happens, that would significantly hurt people again. Now you got to pay more money for gas. Now your groceries are even more expensive, even though grocery costs are rising at some of the fastest rates that we have seen in decades. If gas prices go up, that hurts grocery prices even more because now the transportation cost to bring your groceries from the farm to the warehouse to the store is more expensive. So gas prices hurt every aspect of the economy. And this is where things get a little tricky, because now the Federal Reserve Bank is looking at this saying, we've been trying to fight inflation. We've been trying to bring inflation down. We've done multiple now big interest rate hikes, and we really haven't made a dent on inflation. However, we've made a dent in the housing market. We've made a dent in the stock market. We've made a dent in cryptocurrency. Like home sales have been falling like crazy because people can't afford these expensive homes with these expensive mortgage rates, which is why home prices have been falling. Stock prices have fallen by more than 20%. Cryptocurrency has been cut to a fraction of where it was a year ago. And so all these things have already happened because of the Federal Reserve Bank's fight against inflation. However, we really haven't made a dent against inflation yet. So now the question that the Federal Reserve Bank is trying to face is, what's going to come next? They've already said that we might have to face economic pain because of the fight against inflation. But now our inflation results are still worse than what we're expecting. So does that mean that the Federal Reserve Bank is going to have to get even more aggressive to fight inflation? Maybe. And if they do that, that means more pain to the economy, more pain to these different asset classes, and more pain to the economy means more layoffs, more cuts, more slowdowns in our entire economic sector, which means that that would cause more pain to people. And this is where you have to understand what the Federal Reserve Bank means when they say things, we need to soften the labor market, we need to soften the stock market, we need to cool the real estate market. When they say the things, it's political terms for saying we need to cause prices to go down, we need people to lose their jobs, because that's how the Federal Reserve Bank can cool down inflation. Because remember, the Fed has two goals. They want to, one, maintain price stability, and second, they need to maximize employment. The reason why I keep emphasizing this is because not all central banks have these two goals. For example, the European Central Bank only has one goal. Their goal is price stability, aka their number one goal is just to manage inflation. They don't really care about employment the way that the Federal Reserve Bank is mandated to monitor employment. So these are things that you want to pay attention to, because if the Fed's goal right now is to ignore employment, the Fed's goal right now is to ignore the second mandate and only focus on bringing prices down, that means they're willing to cause more layoffs, they're willing to hurt the economy in order to bring inflation down. And this is where now you as an investor want to be prepared, look for the opportunity, because that's where the opportunity is going to be. The Federal Reserve Bank is already telling us this. They've already been signaling more pain ahead. And this is where now you want to be the one that's prepared and ready and able to capitalize on this, because just like most things that happen in the financial world, 80% of people are going to get hurt, but it creates opportunity for the 20, maybe 15% of people, and you want to be in the minority here where you can capitalize on the opportunities that are coming ahead. This is how the system works. It's happening around us right now. But you got to also understand that this risk and reward can also work in the opposite direction. Let's assume that now, instead of starting a business where you're selling a product, you're investing in real estate. And so now you're working to buy rental properties and you build up a portfolio, and things are going well because property prices are going up, rental prices are going up, you're making so much money, things are going great. But then something like 2008 happens, where now home prices are going down, tenants can't pay.